Welcome back, America, to the Ely Loew 2040 presidential campaign. Today, I want to talk about some economic policy, specifically corporate tax. I mentioned in another video that large governments and large corporations are both victims of similar problems. And in their largeness, they become inefficient, and money gets misused, and also money becomes stagnant. So, our corporate tax policy should really help solve this problem and help direct our tax revenues in a more efficient way. So, briefly, corporate tax makes up about 11% of the US budget every year, and our current corporate tax rate is 35%. But more important than our domestic corporate tax rate is the fact that a lot of large US companies are international corporations. So, what it really comes down to is what is our international tax policy? And international tax policy is incredibly complex, oftentimes treaty dependent, so it's very hard for us as a nation to change the laws without having to also change our treaties. And is also full of loopholes because all these treaties and laws were kind of designed way before the internet and way before the kind of boom of internet commerce and internet products and internet business. So we need a new tax system. It's as simple as that. But if you're trying to simplify a complex system, it's very complex to do. So realistically, any changes we make, even if everything I suggested today is an ingenious idea and was instantly implemented, it would probably take 10 to 20 years to actually make work. But let's run through a few ideas, because the first one is our domestic corporate tax rate. 35%, way too high. Most countries, most developed countries around the world either have a flat 10% tax rate, and that's more of your Eastern Europeans and your kind of developing countries, or your more developed countries, they're going to have 15 to 25%, right? And so we're very non-competitive in that area. So that's a big problem. I would strongly recommend that we do a phased approach down to 15%. We could probably drop it right away to 25%, and then to 20, and then to 15. Now, one thing is, though, I do think our corporate tax rate, our corporate tax revenues should remain neutral, and that's very difficult to do. So where would we make up the loss from the lower rate? And that would be by implementing an international corporate tax rate. Now, you may or may not know this, but U.S. citizens are taxed on their global income. You go and you leave the U.S. and you live in a country where the income tax is only 20%, income tax is only 0%, you still have to pay your U.S. tax rate. And I think we should have a similar approach and a similar philosophy to corporations. All right, so if we have a 15% tax rate, domestic tax rate, we should have a 15% tax on global profit. Now we can put some exemptions there. Maybe we can let the first 500 million or $1 billion be tax-free, because then that gives companies time to expand into new markets, and we don't want to infringe on that. And also we can make exceptions the other way when companies are entering the U.S. So if all their revenue is outside the U.S., then we don't want to start taxing that revenue, because then they wouldn't want to enter the U.S. So we can also make exceptions for foreign companies entering the U.S. But in general, an international tax rate at 15% would be more fair, would prevent the kind of loopholes we're seeing now. Because there's a threshold, the tax havens would still get some revenue, a lot less, but they'd still get some revenue. But most importantly, the smaller corporations, the ones who are only in America, would suddenly have a lot more cash and a lot more cash flow, and be able to reinvest in developing their business and improving their workforce, where the larger corporations, who are already international, would be paying a higher share of taxes than they are currently. So that's why, to me, this makes sense. Your smaller companies pay less tax, your larger companies pay more tax. And I think the reality is because of all the loopholes in international tax law, your large companies are actually paying less tax than your small companies on their profits. Now, keep in mind, this universal tax doesn't mean that if you're making money in another company and paying corporate tax there, that you then have to pay 15% on top. It's only the difference. So if you're in a country that has a 10% tax rate, you'd only have to pay 5% of that to the US. If you're in a country that has a 15% tax rate, then you don't owe the US anything. So I think this would be a more fair system. This kind of embodies the idea of a voluntary equal distribution of wealth while still implementing, tax policies and tax laws that help generate more revenue and more kind of realistic distribution of where that revenue is coming from. There's one more part of this international tax law that I think is very important, and that is a tax on cash reserves. There's over $1 trillion in cash reserves from the top 50 largest corporations in the world. And that money, most of the time, just sits there. It does get used to buy other companies, to invest in research. If those companies ever start not making profit, then it helps keep them afloat for quite a few years. But at the end of the day, cash reserves pose a serious problem to the idea of a truly free and capitalistic society because they create what essentially becomes oligarchies, right? If one large company can easily buy another large company, then you have less competitiveness and you have more consolidation into fewer companies. And this is actually what we are seeing in today's economic global environment. So a tax on international cash reserves would really create the additional revenues to make up the gap by dropping the corporate tax rate. And it would also incentivize companies to spend their cash reserves more quickly, which would help stimulate the economy, help stimulate innovation, and really create, again, a global business environment that's much more fast-paced and much more diverse. And that's good for everyone. Let me know what you think in the comments below. Obviously, this is just an initial kind of policy and idea. I'd really have to do the numbers. I wouldn't want to implement any tax policy that isn't at least tax neutral within, let's say, 10 or 15% of what the US government is currently getting in tax revenues. And I'm sure there'd be a lot of exceptions and caveats that would have to be put in, but no loopholes. Thanks for watching, America, and I look forward to discussing economic policy with you again very soon.